Hello and welcome to this edition of Hardman Talks. My name is Keith Hiscock, CEO of Hardman, and I'm pleased to be joined today by Richard Jeans, who is our Technology Analyst. Before we get into the sector, Richard, let's just hear a little bit about your own background.
Hi, Keith. Yes, I have worked in the investment research industry and financial media for over 35 years. That includes more than 15 years in the sponsored research industry. Prior to that, I was with the Financial Times Capital Markets Desk, where I built up a substantial knowledge of the global capital markets industry over more than a decade. And in sponsored research, I have focused on software and technology services businesses, and have had research clients across the world. I've covered stocks based in the UK and Europe, as well as in the US, Hong Kong, and Australia.
That's brilliant. Let's move on to over that period. What do you think have been the key themes in the technology sector?
In my spectrum, what I've been following, the key thing was really the evolution of software as a service and cloud computing. It has been amazing to watch the pace of development in SaaS. Globally, this has been exemplified best probably by Salesforce, which has experienced phenomenal growth and is now a Dow Jones constituent. I wrote on several UK small cap traditional software businesses that went through the transition to SaaS. What I saw was the transition was painful but necessary, because SaaS is a far more efficient method of software delivery. And if companies failed to switch, they faced losing their customer bases to new SaaS entrants. Additionally, SaaS offers a natural recurring revenue business model, which means that means more predictable and much less lumpy revenue streams. However, the SaaS transition across the software industry is now at a very mature stage. For instance, Sage, UK software giant, is in the late stage of its transition.
Oh, that's interesting. But within that very wide space, are there any particular sectors that you focused on?
One key area I specialized in was financial software. I covered many of the UK listed financial software companies, as well as several European companies. A key theme across the sector was mergers and acquisitions. Ion Trading was the key acquirer among trading related businesses, and that includes on the commodity space. While SS&C, the US software giant, was the key acquirer in the asset management space, and these two companies collided in the competitive battle for Fidessa, which Ion eventually won in 2018. Fidessa provided trading and analytics solutions to both buy and sell side clients.
Okay. And then if we focus down on what's happened in the last 5 years, pretty unusual period in many regards, I'm sure.
Certainly with the COVID-19 pandemic, that of course led to the acceleration of digital transformation. And on some estimates, that brought forward the digital transformation by around 3 years. That led to a boom in tech stocks, a boom in investment. And the tech sector peaked in late 2021. But since then, there has been something of a hangover across the large parts of the tech sector. We saw a broad sell-off in 2022, which was also linked to the tightening of the interest rate environment. E-commerce stocks were particularly badly hit, and that was really linked to the overinvestment that went on during the pandemic. And also the big tech companies announced a string of layoffs. But the key thing to note is that this interest rate cycle is probably peaking now, and when interest rates start to fall, that should also lead to a move back into riskier assets. But nevertheless, we have seen something of a depression across the small cap space. Until that happens, it is very difficult for many. It has been very difficult for many small caps to raise capital in this environment. And the IPO market in 2022 was pretty much closed. In 2021, there was a lot of IPOs. But again, this is linked to the tight interest rate environment, and which that deters investment into higher risk assets. Lastly, I'd mention M&A. There was a lot of taker activity in the tech space last year. Aviva and Avast were both FTSE companies. They were acquired. That just leaves Sage is the only official tech stock in the FTSE 100. Micro Focus, Blue Prism were also largest tech companies, EMIS, and they were taken over. And many others saw approaches. There's also been takeover activity in the microcap space, and we would expect that to continue.
Okay, that's great. So we look back, Richard. What about looking forward now? What do you think is going to happen in the next 5 to 10 years?
Well, technology is evolving all the time, and it continues to become more complex, and effectively it seeps through all industries. And it's interesting to look back at the last 20 years and about how in the tech bubble, anything associated with the internet was probably was regarded as a tech stock. Nowadays, just about everything is associated with the internet. Everybody's got involved in e-commerce, many in different ways. But so the key thing now is the key thing going forward. I would say the key thing is probably artificial intelligence, or AI, which will have a huge impact on the way we work going forward. Though it is not precisely clear how at this point. ChatGPT has been on all over the media in recent months. But there is also a lot of controversy around AI, and we do not fully understand its consequences. I'd also mention it has been, it's been a topic that comes up on nearly all the recent analyst calls.
Okay, now, Richard, that's really interesting. Thank you for sparing the time. You came up with some quite interesting themes across the sector. Thank you also to our viewers for spending your time with us, and we hope that you'll like and subscribe to our YouTube channel. Thank you very much, and that's the end today.